Hello everyone, you should be able to see. Welcome back to another Lumley trading live stream. We're going to be going through the FOMC coming out in about 3 minutes from now, coming out 2 p.m. Eastern time. So again, we've got the main charts I want to be paying attention to here. So firstly, what is this chart? So this is the 4,440 puts. Again, we stream every day, 9:30 to 11. We did talk about this play. We entered it. We were talking about trying to get near those 100s, 200s as it kind of comes down for the lows, because then you have that defined risk and these options normally pop a few 100% before the release. And that's what we can see here. We got them, my entry was at 160 and they popped up to a high of around 430. Again, I got out at the anchored VWAP, so just over $300. But overall, did provide nice opportunity. So that's what we're looking at. We're also looking at SoFi. Reason for this is, again, yesterday, I think Monday, it was super volatile off the student debt relief news. It tends to be quite volatile, so I just want to see how it reacts on the release. I won't be touching it. Obviously, we've got JP Morgan, so we can start seeing how the banks are reacting coming into the release. We then have the 10-year bonds. We have the S&P 500, as in the ETF, so SPY. And then we have the Qs, so the NASDAQ ETF. So these are going to be the 6 main things on watch. We will be updating this middle one with the options as they move. And actually, I'll add it to my second screen so I can start seeing how they move in advance. Because what I do is I get the SPX and try to play either direction potentially. So we'll see how this starts to play out.
It tries to blow through these stories, and talk about things that they think are going to be important to voters.
Well, and it's this story to me, when we were talking about it this morning, we were just talking about whether or not this is even something that we wanted to devote a whole block to, but it's obviously a very viral story today and something that a lot of voters are talking about. So, Jeannie, as you said, it's something that we're going to continue to get news on in the coming days, and it'll be interesting to see what we find out.
That's right. And, I'm sure the president, amongst any other people in the White House, are hoping it goes away as quickly as you said, Madison, as he heads overseas. He would like to change the focus. But it's something you can't escape because, in fairness to all of our friends in the media, it is a story.
What I'm actually going to do is I'm going to take the SoFi off the chart and watch. Oh, it would have come out. It's for 2 o'clock. Because I want to see how the options perform instead. So I'll be doing that. I'm going to put SoFi on my own chart. Again, these are the options that I would probably be looking at coming into the release. There we go, we're getting some movement now. There we go, we're seeing some moves. Just trying to see, I can't see anything key from it yet. Again, I'm just going to be focusing on the new sector of it. It will read the key headlines. There we go. Almost all officials favoured holding rates steady at June meeting. Some officials favoured 25 basis point increase at June meeting. Almost all officials noted in the SEP that additional rate increases would be appropriate in 2023. What's up, Apex Futures Trader? We also have the FN. We also have officials said GDP resilience on recent quarters would be subdued over the rest of 2023. Core inflation had not shown sustained easing since beginning of the year. Again, we're still continuing up on the SPYs. They're taking it very bullish. Staff still see mild recession later this year, followed by moderately paced recovery. Staff saw possibility of avoiding downturn almost as likely as mild recession baseline. Almost all officials expected more rate increases in 2023, and some favored rate hike, but went along with the pause. Those are the key things coming out so far. Looks like we faded the initial release. This tends to be a common thing. You might want to be keeping track of this. We do see this happen quite often, where the release will come out, will spike away in either direction, and then we come back in for the fade. That's especially when I'm looking at the futures. If you're still here, Apex, that's usually one thing I look to trade on the futures account. Here you go. This is why I look at the options, because they do spike. The way I look to trade them is if they fall in price by 50%, that's usually where I look to get long. So again, you go from the 170, roughly where they opened, 50% decline in price, that's where I look to buy. So in this case, we hadn't quite hit it. It would be around the 85-cent area. We'll draw out the same on this. So around 180 on those. So again, if they hit these, usually an area I'll be looking to go long at. The only time these fail is when the release comes out and it's just a steady move in one direction. Does happen, but not all that regularly, so that's how I tend to look to trade it. No new information from that Fed release yet. What are you guys looking at during this release, or are you just looking at the market? Are you trading it? Are you not? Again, we'll leave the Qs a bit more zoomed out. I'll leave the SPY quite zoomed in because, again, we do have 6 charts on there, trying to make it as clear as possible to see. The banks are starting to get a bit more bullish on it, even though they were bearish. They were inverse of the market. Key thing to note. Bitcoin down on the release, so is gold.
I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie.
I was trying to get in the Bloomberg thing so you could hear it, but they just finished it real quick. But they basically just were covering anyway what we were looking at. So nothing all that new. Yeah, you're just watching. Makes sense. Yeah, with this, again, the only thing I like trading with the futures is normally that initial release. As a fade happens 9 times out of 10, or probably actually about, say, half, probably like 80% at the time, actually. And then, yeah, I focus on the options for the rest, because usually you can get these nice bounces. Or usually, just as well, if we do push down on the puts, I'm going to be a bit more hesitant, just because, again, we moved down really close to that entry quite quick. So if the puts start to fall, I would delay that entry a tiny bit. Okay, we're putting down on the calls. Again, the overall SPY's pulling back. We have the Qs testing its anchor VWAP. They're taking it quite harsh. Some new stuff's coming out. Staff still see mild recession later this year, followed by moderately paced recovery. I think that was already released. Staff saw a possibility of avoiding downturn almost as likely as recession. Baseline, that's where we've already seen all this. It's being re-released. Almost all officials expected more rate increases in 2023. Yeah, and some favoured hike, but went along with a pause. For some reason it's re-showing me the same news. We'll wait for if anything new comes through. Is the news bullish or bearish? As of right now, it's not much. Here, I'll give you the key news, but it's more just saying they are going to hike, so you could take that as bearish, but it's already priced in. But here, I'll show you guys the news. Let me just crop it out, and then I can send it through to the chat. Here we go. So here, this is the key news so far. Again, we've already ran through it all as the release was coming out. I'll try and just push it in this corner so you can see it at all times. And again, we'll update it as it comes out. They're going to hike. Yeah, so that's still... We already kind of knew that anyway. We know there's most likely 90% chance there's going to be at least 2 more hikes. Anyway, we already knew that. And that's why, anyway, this FOMC isn't really telling us anything new. And you can already tell that by the release and why we're not moving far. We're still relatively near, you know. We were at 30 cents on the... We basically flat on the release. As of right now, SPY is literally flat. How do you think the market's going to react? Again, we already know this news. Nothing so far that's come out is really all that new. The only thing that we didn't really know before was, let me get it up on here. It was something to do with, yeah, here. Some favoured hike, but went along with the pause. That's literally the only thing we've heard from this so far that I've not seen before. Do I trade crypto? No, I do not. I don't really care much for it. The only thing I'll touch is the Bitcoin or the Ethereum futures, but I don't trade the actual underlying. What I'll do is I'll play some Bloomberg for you until something new or anything new comes through, and then I'll read it out as we go through.
T-bills, that's just going to drain liquidity further, and it creates all these other alternatives to keeping your money in a savings account. So obviously that is one of the risks the Fed is going to have to watch as it looks at, credit conditions tightening in the economy, just the health of the banking system overall. But it doesn't seem, at least at this point, that that's necessarily enough to deter them from thinking that, okay, we could probably go again if we needed to.
Yeah, well, we've got our very own Mike McKee on the line to break down what we're getting from these Fed minutes here. Mike, thanks for hopping with us.
Wait, I will go through Bitcoin in a sec, but I think this could be a bit more key because they're about to go through the FOMC, so we can hear it from what actual analysts are thinking. So I'll leave this to play out, and then we'll go through it.
The most interesting thing, because there was a lot of hope on Wall Street that we would see a breakdown of where the Fed is and get a better idea of how close they were to raising rates. Instead, we see that the committee was divided between those who wanted to pause and a group that did want to raise rates another 25 basis points. So they came up with a compromise that, in the words of the minutes, was acceptable to everyone. Not what they wanted, but acceptable to everyone. They would pause and they would see what needed to be done in the future. So it sort of raises more questions about where they are at the moment than it gives in terms of answers.
So if it raises more questions, Mike, does it at least provide more clarity or affirmation that even though they didn't hike in June, that they will this month?
Well, the minutes do say that almost everyone who submitted their dot plot suggestions was on the to-move side, so that is a strong possibility for sometime in 2023. But they also stressed, as they have done for several meetings, that they are very data dependent, that they won't make decisions in advance, that they'll see where the economy is when it comes time to vote and make their decision then. So we still have this wide range between staying on hold or raising two more times before the end of the year, and that'll depend on the kind of numbers we get Friday with the jobs report and next week with CPI, and each of those reports going forward through the rest of 2023.
Yeah, it's a big week when it comes to the jobs data we're going to get in. We also have here Sophia Big, an economist at Morning Consult, who I want to bring on. Sophia, thanks so much for being here with us. When you think about these Fed minutes and some of the division over whether or not to pause, what is coming to top of mind for you when it comes to what the Fed's next move might be and whether Jay Powell is going to be able to build more consensus on hiking, pausing, skipping, moving forward?
Hi, thanks for having me. Yeah, so as we know,
Just to say as well, we've quickly updated the text at the top so you can see the information. I'm just on repeat for now.
Today we saw that some participants indicated that they actually favored raising the target range for the federal funds rate last meeting, but then they ultimately decided to vote along for a pause. So I think that this language really informs how we see the next meeting, and likely there will be more consensus for raising, which is what the market has implied already. So I think that probably the participants will be together on a hike most likely next meeting in July.
Yeah, and of course that's just a few weeks away. And Michael McKee, our international economics and policy correspondent.
Again, a lot of this is pretty much known. Even what she's saying, it's nothing new, and I think that's why we're not having a massive reaction on this release. And that's why, again, I've put this now on the SPY chart. You can kind of see we are sitting flat. Nothing new is flying through. So, I mean, we'll kind of watch it a bit longer. We'll go through the Bitcoin actually like you wanted. You're subscribing as well. Thank you very much. So what we'll do, I'll quickly get it up on this chart. We did actually go through it on earlier stream, and it played out basically like we said, which was quite nice. Again, you can always go back and watch that. We did it before the price action happens. But as of right now, on Bitcoin, what I'm paying attention to, and let me just, I don't want to block everything. I'll leave the SPY and the news on the corner so you can still see the key stuff for people who don't care about the Bitcoin. But what we can see on Bitcoin is coming down to here. Again, this is statistical mean. This is where you expect price to revert to on Bitcoin. Again, we called that in the morning, and that's why we're starting to pull back there. If we start pushing up, this is kind of the resistance we're holding right now. And that is our first deviation on the 1 year. So what I'm really waiting for is eventually we keep coming back to retest this. So we're likely to break. And once we do break, got the key target of 35,360. So that's what I'm paying attention to on Bitcoin. But again, we've got some more people speaking on Bloomberg. I'll quickly let this play out. And again, if you guys have any questions, I'm happy to answer them.
Of inflation that strips out volatile food and energy increased 4.6% in May on an annualized basis, which is very stagnant with annual readings for the past 6 months. So while there's some things to be optimistic about in the latest inflation data, and since it's come down a lot, inflation remains well above the Fed's 2% target. And so they're definitely going to be discussing that core portion of inflation and how it's pretty sticky at a high level, much higher than the 2% target.
Well, I know that you focus in particular on food prices and grocery prices, and just doing a quick word search, which we love to do when we get these minutes in. Food is mentioned 3 times here in relation to that PCE data that you were talking about. To what extent do you think that food and grocery prices are going to remain sticky?
Okay, I think they're mainly now just talking about older data, PCE and stuff, so we'll leave that for now. No point going over the old stuff, and the FOMC is a key focus. Again, nothing new apart from what we got here has come out. Again, we already knew basically all of this. We knew, actually, well, this bit, officials favoured a 20-point increase. But the key thing with all of this was, again, some favoured, but went along with the pause. That is really, I think, the only new thing we're getting in here. We know they were still basically going to see a mild recession. I don't think anything else was really kind of new. It was just all old data. And again, it's kind of shown by we're not moving on this release, which is meant to be a very volatile release. Okay, we're starting to get an actual kind of breakdown. Again, we'll see if it's just a slow burner or if it's an actual strong move. Again, could still be looking at the $180 long on the 450 calls. They're about to hit, but again, it's all on the release. No, it doesn't look like any new data is coming through though. As long as no new data is coming through, it's probably quite a sound long. Okay, hit to the target. Would already be up 10%. The spreads are tight on them as well. There we go, already up 20% if you took those. And now we're cracking lows. Again, these are the kind of things you could probably hold for quite a while. We don't even have to scalp them, could probably hold them. But we are cracking down. So it looks like they're then taking this news more bearish. What I'd be waiting for is kind of the reaction to this. Does the pullback take us back to this level and hold? If so, then again, it's kind of just more probably algos triggering right now. If you kind of see us get a, 2-3 red candles now, we get a green candle to pull back and then continue to the downside. Overall, probably going to be quite bearish is how they're taking it. Those puts are flying. And again, this is why we cover these before the release. I just realized as well, we're looking at the wrong ones. These are the ones I called out in the stream. This is the one we should actually be paying attention to. So sorry about that.
Out with the student loan payments, the people who do have student loan payments and need to pay those back are definitely going to react by pulling back on spending on other things, because I doubt they just have a bunch of money sitting around that they can allocate to those new loan payments. So we'll definitely be watching to see if that has an effect. Hopefully it doesn't slow down the economy too much, because the Fed is kind of walking on a tight line where they want to slow down the economy, bring inflation down, but we definitely don't want to cause a recession, at least not a severe one.
Well, it's interesting, and Kaylee made this point earlier today, too, to look at the difference between what the Fed staff is predicting versus what economists out in the real world like yourself are predicting. In our final minute together here, Fed staff predicting a recession. What is your economic and recession prediction looking like following these minutes here?
Yeah, so I only had a few minutes to look at the minutes before this, but something that jumped out to me was that even though they are projecting a light recession, they also saw a probability of slow growth and avoiding a downturn as almost as likely as the mild recession baseline. So I think that everybody is kind of teetering on this this place where it's possible that we get into a mild recession, but it's also possible that growth just slows, and maybe that we do avoid a downturn. So I guess it's going to depend on how things feed into the labor market. The labor market continues to be much stronger than everyone's expecting. If that continues, then maybe we will avoid a recession, but we'll just have to see.
It sounds like Jay Powell is right with the it just depends on the data. We're going to keep talking about this. Stick around for more.
What I'm thinking with this, even kind of from what they said, I might be how I think, might be me being more pessimistic, but I don't really care when they say about them not really seeing that recession, or the moderately paced recovery. I think all we've seen them be recently is over optimistic. Firstly, the inflation was going to be temporary. Well, obviously it has not been. Firstly, they said there wasn't going to be inflation. Then it's going to be temporary. No, it's not. They just keep being wrong, and they'll be honest in what they're doing to combat things, but I think they're just overall optimistic on what's going to happen. And so that's why I tend to always take this with a grain of salt and will take the news usually a bit more negatively. But again, that's just how I'm viewing it. That could just be me being more pessimistic on the market. So again, don't quote me on that, but that's how I'm taking the data. I think we've been shown enough times now that they are being over optimistic. So I'd rather be a bit more potentially realistic on this and see how we go. And again, want to cover this. Again, these are the ones we call during the streams, and that's why it can be good to catch them live. Is again, we called it around this kind of 450, getting near these lows before the release, because we know even if the release doesn't go away, which in this case it has, and that would have made profit, we know before the release there will usually be some sort of volatility, and it will take those calls those calls or puts, doesn't really matter, but it will usually take them into the money. Quickly check out the QQQs. Looks like it's trying to break those lows. I might actually put this in the corner now, and we can still pay attention to it, but I'll put it in this corner here. JP Morgan as well has come back, tested VWAP. The overall 10-year bonds are quite bearish on this release as well. Wouldn't mind actually seeing how the dollar's doing. This is quite weird actually. Across the board, everything's taking it negatively. Oh no, sorry, that was me being stupid. I forgot we're looking at Euro USD. So yeah, Euro's getting weak, so dollar's getting strong. So yeah, dollar's strong off this release. Everything else looking pretty weak. I thought there was a way as well. I can't remember what the ticker was on Thinkorswim. There is a way to get the dollar up just by itself. Let me quickly try and find that, because it'll be probably easier to understand for people who don't trade Forex when looking at, instead of looking at the euro dollar. Yeah, I can't really find it anywhere, so I'm not too sure. Oh, is it DXY actually? It could be DXY. Yeah, dollar DXY, there we go. So I'll put that in the corner instead, because that will probably be a bit clearer. But yeah, dollar strong onto release, buys breaking lows. So yeah, now it is taking everything a lot more bearishly, especially since we've broken this low. Now I can kind of confirm that then whether it's the algos or institutions are now taking this a lot more bearish. Those those puts are really flying. So again, if you were holding them from the earlier live stream, probably looking to cut out the remainder of the size around now. Again, the bonds aren't really moving too much anymore, but they were overall still bearish on the release. Not by much though, literally a tick. Dollar's really strong off this release. Again, faded that move quite quick. That's normally the main thing I look for, especially you get it on the currencies all the time, where you fade the move. You get it on the indexes, you get it on the currencies. Again, thing to look out for future releases. And definitely something I like to be paying attention to. Breaking these lows. And again, this is another reason why I like playing these 0-day expiration calls. You can see you're paying 250. Even if one loses all the value, you probably make it back on here. You can see this one's lost, $200 of value, and that one's up over over $200 or $300. So a lot of the times you can even play them as a straddle. Don't think we're getting the currencies moving all that much off there. Anything else you want on this chart? Anything you want to be paying attention to? Again, JP Morgan holding up quite well. Pulled back to its VWAP, but taking the news still relatively well. Again, I think that's all the news we're going to get though from the FOMC. Nothing news coming through. Anything else probably would have came through by now. So yes, nothing else is really happening. Okay, we're going to go back to Bloomberg for a bit. If anything's moving, obviously I'll jump on, but otherwise we'll... Actually, never mind. They're on an ad break, so we'll leave it. Unless they're coming out of an ad. No, never mind. They're coming out of an ad break, so I'll throw this on for a bit. Again, if you've got any questions, let me know. I'll chime in.
And including for Secretary of State Janet Yellen leaving for China today, the hope here is that she's able to find some common ground when it comes to opening up communication between the two, and Kaylee, of course, figuring out hopefully some mutually beneficial economic policy positions as well.
Yeah, we'll see if they really figure out anything tangible, though, because it seems like they've intentionally tried to set the bar pretty low here, just like when we saw last month when Secretary of State Antony Blinken made his own trip to Beijing. Just the fact that they are talking, they are trying to chalk up as a win here. Just the idea that these meetings are happening in person, that people are meeting face to face, that seems like really all the administration is trying to accomplish. And yes, issues will be raised.
Yeah.
Issues like trade or like debt forgiveness on the part of China being a large creditor to some struggling countries that are in distress. I'm sure the Treasury Secretary will raise those. Does that mean that we're going to get any real news?
Right.
I don't know.
Right. I mean, that's the question. It feels like they're setting the expectations low in hopes of coming in a little bit higher. So we're going to discuss some of the news we might be getting out of this trip with our next guest. We've got Hans Dow here. He's CEO of the Mitchell Madison Group. Great to speak with you, Hans, and thanks for coming on to talk about this trip. Previously, as Kaylee was saying, Yellen has kind of kept the bar really low for this trip. It's saying it's, just a meeting, opening communication.
Just as a heads up, you can see the the puts are starting to get destroyed even on the small pullback. So if you were long on those, definitely be cutting those profits now. I'm out of everything as of right now.
Good to keep lines of communication open. But I think the underlying background with China is that China has a massive PR problem in the US. You have everything from, Taiwan tensions, AI chip sanctions, balloons, spy stations, scandals. You're now in a situation where, if you look at the Pew Research, that 82% of the US population has a negative view of China. That's actually 10 points worse in the depth of COVID and versus, neutral before COVID. I think it's a very, very difficult situation. And policymakers listen to voters, and voters view China as very negative.
Well, as we talk about the policy, we of course had Treasury Secretary Yellen earlier this spring outlining kind of her broad overview of what her policy or thinking is when it comes to the relationship with China. Back in April, she was speaking at the Johns Hopkins School of Advanced International Studies here in Washington, D.C., saying she's seeking a constructive relationship. Just take a listen to the secretary.
We seek a constructive and fair economic relationship with China. Both countries need to be able to frankly discuss difficult issues, and we should work together when possible for the benefit of our countries and the world.
So she wants it to be constructive and fair. She also has pushed back on the idea of a decoupling between the U.S. and China.
Also, strong pullback on the Qs. I would be watching for the anchored VWAP, so $370.25. Probably hesitate if we start pushing it all the way up to there. Again, that's why we said we'd dump out of those puts, because it pulls back so strong. Don't want to be in any of that anymore. I think the options are pretty much, don't really want to be touching them. They're going to be super volatile now. So potentially get the calls. Oh, could have the calls, because again, they'll be popping now. But overall, they're going to decay quite quickly now, because the main release, the main catalyst is now over.
Private sector companies, what's been happening is that people are decoupling, right? They're diversifying. So a couple of interesting statistics. Mexican imports to the U.S. set a record in the last reporting period. At the same time, non-China low-cost Asian countries are projected to be more than 50% of U.S. imports very soon, right? You had Modi visiting in D.C. So there's a lot of things going on that have to do with, planning for a de facto decoupling. There's talk at the top level, of course, but I think the private sector is already acting.
I want to stick with you on this because we've had guests before that have described it as, the U.S. gives you a slap on the wrist when you go to them, whereas if you go to China, you get the red carpet rolled out for you. To what extent are you thinking that countries, some of those emerging markets that you mentioned, like in India, are still sort of swayed by China trying to make themselves more accessible, paint themselves as a more accessible alternative to the U.S.?
I think that is, look, China will be competitive. It's obviously a very large country, emerging power. They want to be, what we are currently, and that could all happen, right? They're certainly going to make progress. I think the other, I'm a little bit skeptical just because the demographics of China are also going the wrong direction. You look at China in terms of the economic.
Well, guys, if you want to join the Discord, again, free to join in the description. If you want to jump on call, kind of discuss what's gone through, always happy to do that. We're just chilling in the Bloomberg News channel if you want to do that. But yeah, that's it.
Due to Western recessionary demand slowdown, there's a bunch of issues around youth unemployment. Their property are down. It's not looking good for them. And at the same time, the big underlying trend is collapsing demographics, right? China is 23% of the global workforce today, but they're projected to be only 18% by 2050. That is an enormous change.
As well, watching the puts are coming into their VWAP and anchored VWAP. Yes, obviously SPY is going to be the main move at SPX, but if we're able to hold it, could potentially get that trend. But don't forget, they're already up about 500% since the release, so would be cautious if you were long. Again, we already talked about taking those profits, or at least majority of them, because it is quite dodgy now. But we are seeing SPY potentially moving back to the pre-release level. Again, it's marked on the screen, it's that orange line. Dollar is flying past, doesn't look like there's going to be any quick turn back or pullback. Again, we've already had the main fade. Once you get that, there's no guarantee that it will come back.
China is coming to it more from a position of weakness than of strength?
I think increasingly so. I would think that they also have, many more domestic problems. If they don't deliver on the growth targets, their population is going to be very unhappy with very, potentially very bad outcomes for leadership. So I think that's what, I really feel that China is overplaying their cards a little bit right now. They're hitting back on those sanctions.
Just going to get rid of the 10-year notes because we don't seem to be getting much movement on them. If you guys want any stocks on there and we can run through them, let me know and we'll run through them. If not, I'm just going to flick through a few charts and kind of see what they're doing after the release.
cloud services that use these NVIDIA chips. So I think they're quite vulnerable on some of these high-end technologies.
So could the U.S. be capitalizing more on that than it is, Hans?
I mean, they could. The question is, should you, right? I mean, you always have to take into account that it's a very tremendous military power. So those types of things have to, play into the equation. And I think the administration is playing it right. That they have to be cautious. They have to keep the lines of communications open, but at the same time protect American and Western interests.
So in our final minute with you, Hans, what is one thing that you think is reasonable for us to anticipate coming out of this trip?
I think what you said before is probably true. Expectations will be low. I think there will be not a whole lot of concrete stuff. Yellen is also on record for saying that that the administration is ready to accept economic costs in exchange for national security, right? She said that too. So I think there's a lot of, I would have low expectations. They will keep talking. I think some of these, trade spats right now could be eased. There might be some agreement around, easing some restrictions. But I think the long-term trend is really towards a private sector driven de-risking, not total decoupling, but de-risking of China and isolating them and limiting the ability to access Western technology at the very high end.
Yeah. All right, Hans, thank you so much for joining us. That was Hans Dow, CEO of the Mitchell Madison Group. Really appreciate you joining us here on Sound On. We are going to get a check on some world and national news right now with Nancy Lyons in our Bloomberg 99.1 newsroom in Washington. Hey, Nance.
Thanks, Madison. Ukraine and Russia are trading accusations they could be planning an attack at Europe's largest nuclear power plant. We get more from Bloomberg's Nathan Hager.
Russia has occupied the Zaporizhzhia nuclear plant in southern Ukraine since the start of the war. Overnight, Ukrainian President Volodymyr Zelensky warned in his nightly address that Russian troops have been seen placing objects that look like explosives on the roofs of several units at Zaporizhzhia. He says the Kremlin could use them to simulate an attack. Russia, meanwhile, is accusing Kiev of planning a provocation. The UN's nuclear watchdog says it's monitoring the situation, but sees no evidence of anti-personnel mines on the grounds of the plant. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Southwest Philadelphia community that was the site of a mass shooting Monday night is reeling after 5 people died. 4 others were hurt. The suspect was arraigned this morning and is facing multiple counts of murder.
Okay, we'll just run through some things, I guess, and see if there's anything key we want to pick out. But again, from the actual FOMC release, seems like the move's pretty much over. Again, starting to see volume die out a bit. Moves are definitely getting weaker. Wouldn't be surprised to see us retest the anchored VWAP on the Qs, and then probably going to continue this downward move. But we'll see. Nasdaq, Netflix definitely looking quite bullish as of right now. Hold that anchored VWAP quite well, pushing into the normal VWAP. And depending how the market takes it, we could definitely fly through there. Again, if you guys want any stocks analyzed or whatever, throw them on and we'll go through them. Wolf as well has been another stock. Gapped and been pretty volatile on the day. Adobe holding the anchored quite nice.
Baseball fans, it's that time of year again.
Yeah, I don't think there's really too much else to go through. See if Snap's moving. Thoughts on Microsoft or VRTX? We'll run through those now. Oh, Snap actually hit our target to the penny. Quite annoyingly, I missed that then. Actually, I think we were watching it on stream. I didn't trade it though yet. But that played out perfectly. Again, these are why you want to be catching the streams in the day. Thoughts on Microsoft. We'll go through Microsoft first. Let me quickly grab the key levels. So Microsoft, the only thing I can really see on it, anything near to where we currently are, is $335. So basically where we are. That is our first deviation on the 1 year. So probably going to be quite a strong support. So that would be kind of my main focus. You can even see actually on the open, kind of gap down to there, got bought into that move and pushed up. So that is our first deviation. This will kind of decide on us whether we're going to be long bias or bearish. Because yeah, basically if we're not able, well, we'll probably come back and test this a few times. If we do, the only thing I'd be watching for is if you break it below it, come back to retest it as resistance, and you start to sell off of that move, probably going to start fading back towards its mean, which in this case could be quite a large pullback and take us all the way to around $328. And if we break that, $303 on the way down. So that's what I'd be looking at from a bearish perspective. From a bullish perspective, the closest resistance we have is kind of 364. So we would need to break our high from about a week and a half ago of 350 and push high to around 364. Then I'd kind of flip a bit more short bias on Microsoft, or at least probably wouldn't be shorting it, but I'd be more aware if I was long, definitely taking those profits because we're most likely going to see a pullback. And then VRTX. VRTX kind of at fair value, so pretty good if you're looking at it from an investment standpoint, but key levels, 357.26. This is our 6-month first deviation. So as we come into here again, expect a bit of a pullback. And right below that, actually, we have the 356 dead on, which is the first deviation on the 1 year. So this is kind of that key resistance, probably why you're starting to see VRTX struggle as we keep coming into this level. Again, this is our first deviation between the 6 month and the 1 year. Usually where we would look to start trading, it's short bias or potentially looking to play a reversal into its fair value, which right now is $337, so around there. So that's what I'd be looking at right now on VRTX. If we start to break higher though, 376 is going to be a key level, our second deviation on the 6 month and the 1 year. So really going to be a strong level of resistance if we could break that. This is when I would actually flip short bias, looking to short and take it down to a target of at least kind of that 357 area, which we currently has as a resistance. So that's what I'll be looking at if we break up. Right now, still kind of hugging this as a key resistance. And if I'm looking long bias, especially on an investment account, I'm really waiting for a pullback of $318. This would be our first deviation on the 6 month, the closest of all our deviations. You can see it was used as a target multiple times, so also a technical support, but also our first deviation. So if we were looking at it from the investment account, I'd be patient and waiting for it to pull back to there. So you sold Microsoft at 349, been trying to figure out when to get back in. Yeah, great area then to be selling out. Yeah, definitely makes sense to get out where you are. If we're looking at getting in Microsoft kind of relatively soon, yeah, either the 335 if you want to get in kind of now, or we could see a pullback to 329. That would be our statistical mean. So if we push back to there, quite a high chance that we potentially bounce coming into this level. So yeah, Microsoft, that would be my target I'm looking at if you don't want to be buying that first deviation. And again, we did kind of hit there Friday. That is statistical mean. So if we did go there, I'd be looking at that. If you want to find an even lower support, it would be $303 would be our lower statistical mean for another potential long. How are you looking for this? So is this for a trade or is it an investment, swing trade, day trade? Like what is your outlook or term on it? From an intraday perspective, though, we do have Microsoft as well retesting that anchored VWAP. If we fail, probably downside to look at. Long trade, okay. And what's your time horizon on it? A month or so? Okay, quite key. We've already came back to our pre-release level on the Qs. We're very close to it on the SPY. It looks like we're giving up all those gains. The dollar's still holding strong though, way above its pre-release level. Again, if we got long those 180s and you didn't play it as a scalp, they've now just gone back in the money. I'm really new trading, just been buying long positions. Long positions for me are several weeks to months. To be honest, probably the best way to start. It's easier to predict over a longer frame, so make your adjustment a lot easier into trading. And then, yeah, you don't really have to manage them as much. So good luck on your journey. Should be, or hopefully as long as you stay determined with it, should hopefully see some good progress. But instantly off the bat, it seems good if you're selling as well near kind of those highs at 349. You probably knew then about the psychological resistance at 350, knew that we were likely to get a pullback, and you're not being too greedy on the profit. So looks like you could be off to a good start if you're still relatively new. Okay, those calls again flying. They're already up about 40% from our entry. So far I'm up 3k since I started a month ago. Been trading with 80k. Well, that's great return, son. Can't ever complain with that, especially in a month. So yeah, congrats then on the move so far. That's really good. Good to see. Happy to see it. Are you also investing as well, or are you just looking to use some money just for trading only? And you got any plans of maybe going into day trading, or are you just looking at kind of the longer term swings? And also, what are you focusing on? Just stocks, or are you looking at options, futures, anything else like that? Bloomberg's doing a quick covering, so I'm going to let them chip in.
4.94%. Gold 19.16 the ounce, down 0.5%, while West Texas Intermediate crude oil is higher by 3%, 71.91 a barrel. Again, recapping, stocks lower, S&P down 8, a drop of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to
Cool, there we go. Just had that quick recap. Always like to get that in. Would love to get into day trading, but my account isn't classified as a day trading. Been using Fidelity. Why do you mean it's not classified as day trading? You should be able to day trade, and as long as, in your case where you got above 25,000, you aren't limited to the per person day trading rule. But to be honest, if you're new, I probably actually wouldn't recommend it, because yeah, you can make money a lot quicker, but especially if you're new and you may don't have the best risk management, you can also blow your accounts quite quickly. So probably the way you're starting, looking at the long-term trades first. Again, a lot easier to predict, a lot less likely to lose a large sum of your money. So you should probably be a lot better off doing it the way you're doing it anyway. We'll go back to Bloomberg for a bit again. If you guys want any questions, want anything analyzed, again, throw it through and we'll go through it. And again, if you guys are leaving comments, obviously I'll reply. Great feedback. I've basically been splitting 40k and 40k into two different stocks. Yeah, to be honest, I said I think you're starting off in probably one of the better ways that I see around here. Normally, a lot of the times, people I see, they're throwing their money into stocks that just are kind of usually rubbish. A lot of the ones more recently, I think CGC, again, we analysed it, I think 2 weeks ago, 80 cents, saying it would just continue to fall. It fell about another 50-60% since then, but I still see people bag holding it. Same on Mullen. This one was a massive shock. You know, it went from, well, it hit a low of 10 cents. You go back a month, it was at $1. People are still bag holding this. So if you're not in the kind of mindset of buying the small caps thinking the gains are going to be there, you're going to be better off than 95% of people getting into trading. So, to be honest, great to see. I'm guessing as well the ones you're looking at are usually large cap stocks. What do I think about Rivian? Again, we can go through that. We actually did an analysis video on it a few days ago as it started to pop. Let me quickly get the key chart up. So, throw this chart on because it'll probably be a bit clearer. Dash just hit a target, so we'll go over that in a second as well. As you came into here again, this was on a catalyst. They delivered off their delivery numbers. They delivered more than estimates. You also had Tesla's news out on the same day, so that's why we didn't trade it short bias, even though it was coming into a key resistance. But what it is now, the catalyst is starting to calm down a bit. What I'm really paying attention to on Rivian is, firstly, if we come back and test actually this 1870 and we hold, good chance we're going to push to $23.25. And this is really what I'm paying attention to on Rivian. Again, if you're just buying stocks, probably not the same trade plan, because to me, I think this will probably be a good sell-off opportunity. I'll be looking to trade this short bias from that level. But from a long bias perspective, if we come back and hold the $18.70, definitely a good potential long, but again, need to have relatively tight stop on there, because if we do start to crack, these are the kind of stocks where they can crash quick and heavy. So definitely want to be managed if you're holding or trading that.
The case in the fall term, which starts in October. But there's something that's known as the shadow docket. So let me spell it out for you. If the Biden administration asks for an appeal and then asks for a court to stay this ruling, which would prevent them from talking to social media companies, that could quickly shoot onto the Supreme Court shadow docket, where they would be called in to weigh in immediately on this, well before the October term starts.
So I'm curious when it comes to this.
What you said, you wouldn't put in more than 10k into them, probably more like 5k as a several month position. Then obviously you can manage it a bit more if you're not putting in too much. So you should be all right. Also as well, just a note, SPY has now came back, given back all the losses on that move, and now basically back at its pre-release value, holding that anchored VWAP. We'll see how we do. The dollar is starting to give back some gains as well. We'll see if that fades back and gives back all its gains from the FOMC release as well. And Qs are really just flying through its pre-release. So as of right now, the Qs are bullish since the FOMC release. SPY is bullish since the FOMC release, and the dollar is also still stronger since the FOMC release. And again, the release has been out for about 49 minutes now.
These are the kinds of issues that our court system is being called on to parse, and where do the lines fall there?
Yeah, well, and the safety issue you bring up is something that President Biden talked about recently when it comes to this. Take a listen to what he had to say.
They're killing people. I mean, look, the only pandemic we have is among the unvaccinated, and they're killing people.
Okay, so to give some context on that, that's President Biden talking specifically about the impact that social media platforms have when it comes to misinformation impacting vaccine uptake. In our final minute here with you, Sarah, does that argument stand when it comes to safety and free speech and White House officials reaching out to social platforms to suppress speech in an effort of that safety?
Well, again, this is exactly where the lines are being drawn. And the Biden administration has said it was doing nothing more than trying to protect people, ask the social media companies to take down information that was hurting people. On the other side, the conservative viewpoints feel this is the kind of information that is, if this kind of information is being taken down, then that censors effectively conservative views. So there's a real standoff over this issue in this country right now.
And Sarah, finally, just as we talk about the standoff over this issue, it seems like it's ultimately social media moderation is going to come down to the courts, to the justice system, that's how all of this is going to be decided? Or judicial system is perhaps a better phrase.
Up until now, we've been looking at a measure called Section 230 of the Communications Decency Act, which protects social media companies for...
We'll cover actually that in a second, because I quite like this about how they're hopefully going to reduce the amount of government intervention with social medias. I can't see them ever getting rid of it completely. I think the governments just have too much power, but I definitely think it could be good to kind of get rid of silencing one side or the other, whether you're Democrat or Republican. Shouldn't really matter. They shouldn't be blocking out one side, which we did kind of see, I guess, during COVID. But anyway, Stonk Squeeze says political tracker Gingrich purchased DWAC shares this morning and Monday. We did actually do an analysis video on this today if you want to check that out on the channel, but very quickly, I'm guessing by your name then you like the short squeezes. Definitely a stock that can squeeze. We've been seeing this tons of times in the past, where actually try and zoom this out even more, but we do keep seeing this anyway, squeeze. And again, if you're looking for those squeezes, and cool, that's a great opportunity. From how I trade, I don't like these squeezes. I'm not going to trade them long, because what goes up so quick can come down so quick. So if you're looking for the squeeze, can be a relatively good stock for that. But for me, I'll trade these short buys through a risk-defined strategy. So again, that might mean vertical spreads. It might mean short the shares, buy the calls, or it might just mean buy outright puts. DWAC provides all of those. It is hard to borrow, so might struggle on the short in the shares, buying the calls, but vertical spreads and buying outright puts will work well. And considering how this stock's moved in the past, whenever it squeezes, you get a massive sell-off. That's exactly how I'd be looking for to trade it. I think it's got too much hype on it. So again, that's more how I'm looking to trade DWAC. If we get a pop, we did get it here, came into a key level. Did most of the move pre-market though, and already sold off by the open, so not something I traded personally. But if we do squeeze to the 1850, really looking to trade that short bias, it should be a nice trading opportunity. Again, let me know, guys, if there's any stocks you want to run through real quick. Well, not even real quick. I mean, we got time. But yeah, it doesn't look like anything new from the FOMC's coming out. Again, the trade we called for the FOMC up really nice right now. Final target would be the anchored VWAP. Right now they're up 58%. And again, targets would be the highest of 440. Wouldn't look to hold past that level at all. Again, the puts are starting to fall in price, but this one was called earlier in the day, around I think 10 a.m. And again, this is how the 10 a.m. ones, oh sorry, no, it's still put. This is how the 10 a.m. ones reacted. Up over, went to a low of $1.50 back here and pushed up just under $6. Oh, sorry, 525 was high, so 400% on those options. So the moves today, and this is why it's one of my favorite days to trade, is FOMC. You can make a week's money easy, or not easily, but you can, if you get the trades right, you can easily make, I keep saying the word easily when trading, it's not easy. You can make a week's money if you get the direction right on a day like FOMC. Or a J Powell speech any of these days. We'll go back to Bloomberg for a bit again. I'm watching the comments. If you guys want anything ran through, we'll go through. But if not, we'll kind of just see how everything's reacting.
Is engaged in a company-wide cost-cutting program with plans to eliminate at least 27,000 jobs. Across Amazon, Jassy has also jettisoned 37 different projects deemed unnecessary. The Hollywood studio has spent tens of billions of dollars on original programming over the last decade. Last year, Amazon spent $7 billion on original shows, licensed programs, and sports, up from $5 billion the year before. Only Netflix and Disney spend more on streaming. Charlie?
And that's Dan Schwartzman. Netflix shares are up by 1%. Walt Disney trading lower, down 0.9%. Amazon up now by 0.1%. GM and Toyota both posted strong sales gains in the second quarter. Signs of consumer health in the auto industry as semiconductor supply improves. General Motors shares are up right now by 1.2%. ADRs of Toyota, they're up by 0.9%. Those are the company stories we're following.
What is quite weird, off that FOMC release, obviously we see everything sell off. The SPY sold off. You obviously saw Amazon follow case. One second, let me just turn that down. Yeah, obviously we saw the SPY sell off. We saw Amazon sell off on the news. What's weird though is obviously SPY's given back, or came back at least to the open, if not a bit above. Whereas Amazon is, given or got back about 50% of those losses. So strange to see, especially on a name like this. The others look like they were doing relatively strong that they called out, which was Meta. Meta's got back. And the other one was, I can't actually remember now. Disney, wasn't it? And Disney, go to 2 o'clock, yeah, basically came back to where it was. So Amazon's really underperforming since the FOMC release. Strange to see.
in the White House. He was at Camp David for the holiday. So this is a chance for staffers to bring friends, family to the White House, an opportunity they don't get that often. And it seems like something was dropped along the way. But even though I'm speaking a little bit in jest here about this story, it is important, and it's something that's going to continue to come up in the coming days as you know, folks are investigating who brought this in and how it got there.
And I'm sure Matt Miller up in New York is paying attention as well. This isn't just a DC story.
Somebody brought blow into the White House.
Yes,
or
Matt, I know you've got a take.
Did someone who works in the White House already leave it there? I mean, there surely are cameras all around that house, right?
Totally.
Yes. Totally. We're going to get to the bottom of this for sure in the coming days. I'm confident we're going to get some big news out of this. All right. Well, you're going to continue to hear about all of that and more with Matt Miller and Jess Metten on Bloomberg Business Week. They are going to continue to...
Also, what do you guys think about that being banned in the White House office? You think it was staff or just visitors? I'm also interested to see how much it actually was. They keep saying a small amount. How much is a small amount? But I guess, yeah, I'm surprised I haven't found out who's done it yet. I guess we'll find out soon, though. Just quite a funny story, I guess, to see. Bit random. Yeah, given his son's reputation. Yeah. His son's never, though, even at the White House, is he? Well, obviously he doesn't live there or anything with him. What's up, Patel? You good? How has the FOMC been for you? I'm guessing you've just turned up. How did you trade it? Did it all go well, or you just watching it? Again, actually, I'll leave these up there. Actually, might as well. Again, these are the keynotes that we had from the FOMC release. Those calls as well came back down to break even if you hadn't already gotten out. Again, we would have locked in some profits. 420 now going to be that final target, which is going to be between the VWAP and anchored VWAP. Don't forget that position was already up 50%. If it goes to the final target, that'll be 130% gains on them.
I mean, volume was down about 20% on Monday. And then if you're seeing today, I mean, things kind of, looking at what's happening with the communication services and versus some of the other decliners, kind of offsetting those gains today. But it was very quiet coming into this week, Matt.
Yeah, not a lot going on in terms of markets. We did have a lot going on in terms of America, right? You had problems with airlines that we're going to talk about, a lot of cancellations, a lot of ruined vacations, and we have a lot going on in terms of politics as well. We're going to talk to a couple of reporters.
Not going to lie, I hadn't actually seen about the airlines which they're talking about, which seems quite strange because you're seeing them near highs. I mean, Delta today is flying near $49. And again, we did cover this in the stream, also did a video on it, looking short bias on Delta from $49, going to be extremely overbought, already extremely overbought, but extremely overbought at that value.
At least for now.
And also looking at what that means, especially when those payments start to become due, they accrue interest in August and then start having to be paid in October.
All right, so we'll talk about all that. Right now, let's get over to our colleagues in TV. We're joined by Scarlett Fu and Katie Greifeld for the simulcast.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S.
An hour to the close, by the way.
This is the countdown to the close. We've got 60 minutes left in the trading session. I'm Scarlett Fu, along with Katie Greifeld, and we are joined now by our colleagues Jess Metten and Matt Miller at Bloomberg Radio. We together welcome all of our Bloomberg audiences across TV, radio, YouTube, and those streaming on Bloomberg Originals. And Jess and Matt, it's too bad Carol's not here because if she were here, my guess is she would want to talk about China, given the data we got out of China.
Definitely, and what an honor to fill in for the Carol Master today. I'm sure she's enjoying her time, probably potentially on a boat somewhere. But looking at these markets, I mean, I was here on Monday, and just the volume, not surprisingly, right, when you're coming into a week like this, is going to be a lot lower, just given the holiday, right, Matt?
Yeah, absolutely. Volume will be down, but it's surprising to me that we continue to see this strength in the S&P 500. I mean, 4450 is still, as you all know, well above strategists' forecasts for the S&P at year end. I think right now we're still at 4,091. So
coming in close into a dash strong resistance, $79.66 could be a target if you're long, or potential short if you're short bias.
to meet strategists' expectations.
And looking at what's the gainers in the S&P 500 today, looking at what's happening with communication services type stocks, those are leading the way when you're looking at what's moving things up. But also, if you want to look at more individual type names, looking at what's happening with Meta as well as Google, seeing some upgrades there when it comes to Alphabet stock. But then when it comes to Meta, it's supposed to roll out a bit of a rival type platform when it comes to Twitter. But you're seeing those two names leading gains in that particular industry group in the S&P 500.
All right, very much looking forward to seeing how that does. I know Carol and Katie will still be addicted to Twitter regardless. I want to talk about.
I signed up for Blue Sky. I will put that out there.
Yeah, it'll be. I'm gonna be watching you, Katie, to see how you react to this new service. Are you gonna put cats
on there? Do I want the same brand on Blue Sky? Should I be someone different?
It's a pretty good brand.
Yeah, we'll see. Anyway,
It's
Matt,
an
what's that
opportunity
chart?
to reinvent yourself, just like earnings season. Is that a good seg?
It definitely is.
Take a look at the revisions that we've seen heading into earnings season. I guess it kicks off in earnest next week, right? And
It is with JP Morgan on July 14th.
Oh my God.
absolutely, on Bastille Day, we'll find out how it's
Will be exciting for earnings next week. Yeah, you always start off with the big banks, so you got JP, Goldman usually on the same week.
see revisions for global earnings, revisions for European earnings, ex-Great Britain, of course, and revisions for U.S. earnings. They tipped a little bit higher after first quarter earnings were out, and now they're coming back down. We now expect earnings
Also, forgot to state, we did come back, retest the pre-release levels on both the Qs and the SPYs. As it's holding, probably going to take it more bullish now, so we may potentially see a move to the upside. And as well, just so you can see, the dollar's gone into the extended hours. So don't take as much notice of the dollar now.
Modest losses to start the week off here. You're looking at the Russell 2000 lagging behind everyone else. What else is new? And of course, the NASDAQ holding up a little bit better in that it's mainly unchanged versus the S&P 500, still holding at 4450. So if you were to close out the year at this level, there would be a lot of people who would be pretty happy with the gains that they booked in 2023 so far.
You know, Scarlett, it's funny because that board kind of matches my dress, which is more pink than red, but still, let's go with that. Let's take a look at some of the sectors, though. This is interesting because we were just talking about, you know, obviously it's a down day in markets. If you take a look at what's doing well, it's utilities. That's pretty defensive. Utilities up about 1.8%. Also seeing some love for communication services up about 1.5%. Real estate, too, up about 0.9%. So 3 in the green, 8 in the red. You take a look at the bottom of the list. Materials off by about 2.4%. That is your biggest loser today, Scarlett.
Yeah, I think the materials are tied to that China story with services coming in weaker than expected. Of course, that.
Yeah, and we've already covered DWAC. We also had a video out on it today. Again, I'm not a diamond hands trader. I'm not a to the moon trader, so I would never really predict the stock going to the moon. But we are all about being prepared. So, key levels on DWAC are the 1485 and the 1570. So as we come into here, really start to expect pullbacks. It's what we saw today. And actually pre-market, we hit that level to a T. These are our first deviations between the 6 month and the 1 year. High probability short area. Again, we sold off into that. What I'm really paying attention to, and again, if you are a moon trader, think it's going to squeeze, $18.50 can be that key target. That's what I'd be looking at, and at an extreme push, $21 to $22 as key resistances. So yeah, if you're a to the moon trader, those could be potential targets. If you're more like me, who likes to trade the reversals on stocks that pop and hype, again, this stock's done it multiple times. You pop, you sell off. So as soon as we get this on DWAC, that's all I'm looking to do. Play against that move. It's 900 out of 10, not going to survive it.
Pressers that he looks at the 3 month 10-year spread rather than the 2s, 10s to signal whether a recession is coming, and that's inverted as well. So wherever you look, the bond market is telling us we're having a recession in the next 12 months.
I'm happy that all the curves are on the same page, because I got to say it's a lot easier to call up the 2-year, 10-year spread on your terminal than it is the 3-month, 10-year spread. But maybe that's a me thing. But again, they're all sort of sending the same message, and 2s, 10s in particular been inverted for a year. At what point do we say maybe this wasn't a recession signal this time around? I guess we have, what, 6 more months?
Yeah, well, the Fed is signaling it's going to raise interest rates the next 2 times. So that accounts for why the shorter duration debt is yielding more. The big question is whether this is a useful signaling tool anymore when everyone expects it to signal recession.
Yeah, well, I mean, I think that the 3s, 10s is more useful. And by that, I mean 3 months, 10.
Again, on the calls we're long, really basically out by now. You could probably squeeze an extra, $40 on them, but it's whether that's worth the risk to you. VWAP, anchored VWAP, always going to be strong levels. You're starting to see the options pull back more than the actual underlying, showing you that the weakness is starting to come in. So again, we got them called long at 180. Probably time to get out.
If you think about just how hot that bid for cash was, maybe starting to ebb a little bit here, especially if you also look at the money market funds. The hottest trade in bonds, maybe it's starting to cool.
All right, well, we'll continue this conversation in an hour because that does it for now. We'll be back together again live on television, radio, as well as YouTube, and a number of other streaming services at 4 p.m. Our Beyond the Bell coverage kicks off again, or we resume it, I should say. We'll take you through today's market close.
Alright, cool. While we're on the ad break on there, again, if you guys want anything ran through, we'll go through it. And then they're actually starting to see DWAC get a bit of a move now. So to the moon traders, diamond hands, seeing it pop up 50 cents in 2 minutes as of right now. Again, don't forget it's still already up 16% on the day. Looks like we may come and retest this 1485. And if so, we may retest that 1570. We've already hit these. I'm not trading these short buys. So looking at that next resistance, which was the 1850. And if we break that, 2170 to $22.
S&P 500 is trading at right now.
All right, so let's talk about the drivers of this. Molly Smith joins us right now, economics editor. She's in the Bloomberg Interactive Broker studio with us, and we have Emily Grafeo as well, cross-asset reporter from Bloomberg News, here to make the foursome. What do you see as the economic impetus behind this gain? I mean, people always say Wall Street and the Main Street economy are disconnected, but it does seem like the economy is still fairly strong. We haven't gone into a recession yet that we know of, and the market is just plugging along.
Yeah, I mean, as far as any catalyst today, really was just the minutes that came out about an hour ago, and which kind of took me a little bit by surprise. Definitely showed there was a lot more division going on.
Q's retesting its pre-release level, the $370.53. See if we can hold. And as well, DWAC looks like it's pushing up that bit further. Dollar as well, still near the high. SPY hasn't given up all its gains like the Qs have. So again, we'll see how it goes. And again, like that 4,450 calls that we got on the SPX, looks like they're pulling back now, and that's why we would have got out. Really kind of in that VWAP range, not worth the risk for $40.
We're also looking ahead to earnings next week, and beyond that, Emily, I don't see much more than like the S&P, the 10-year, and the price of Bitcoin. Give us the cross-asset perspective.
Well, the cross-asset perspective is we have rates moving up higher every day. We have these Fed minutes that come out that kind of reiterate this idea of a central bank that wants to go higher for longer, and yet the equity market has been very resilient, and that's caught everyone off guard when you look about the strategists that Jess mentioned, but also portfolio managers that I have been interviewing all year, heading into the year, staying in cash, staying defensively positioned, low vol, and we're seeing that the broader market is outperforming that.
So, Molly, when you're looking at the Fed minutes, and not surprisingly, the disconnect and the divergence between members at the Fed, and we already got the dot plots, obviously, when we had the Fed's meeting 3 weeks ago. So, I mean, was it really a surprise? Did we get anything new from the minutes?
No, definitely nothing new per se. I think maybe it was just more of like a, kind of like to see like how there was like a, the language of like, this is what the people who would have supported a hike were thinking. Right. And to me, it made me think, well, was the dot plot then the concession to get them to be on board so that we preserve this, unanimous decision here? Because that really has been a bit of a strong point of Powell's tenure here, that like he has had a lot of unity on the board, and something that he would probably look to as a point of success.
Hitting that 1485 on the DWC again, that's our first deviation on the 6 month. Start seeing how we react to it. Probably start to see a lot more volume kick in now.
Okay, we'll stay on hold, but as long as you show that we're going to keep going.
Well, and others seem done already, right? Every time we hear Raphael Bostic speak, it seems like
the newest dove.
The
yeah,
dove
where'd he come from?
Right? He doesn't want to see any more rate hikes because he thinks inflation is coming down, and that's going to provide passive tightening, I think is the way he puts it. I don't
Which
know.
kind of is happening.
Well, so what do you guys think on inflation? How much longer do you think it's going to last? As well, Q's starting to pop. SPY also near the highs as well. We'll start seeing how it reacts, but seems like it doesn't want to break its pre-release level, that $370.53. Tested that twice since a break, held both times now.
Inflation, or those core services, ex housing, the super core, all the other ways they like to slice and dice it, that there is still, underlying inflation is still very robust. So I think there's really something for everybody in this economy right now, however you want to paint it.
So, Emily, whenever you're speaking with portfolio managers, how are they positioning?
Well, so the defensive, it continues to catch me off guard, because you'd think that people have switched now to not being so defensive in their portfolios just after we've been caught so off guard by these equity market gains. But I do still hear a lot of people in cash adding that 5% yield. They want to get that, and that's actually more rewarding on a risk-reward basis than maybe taking the risk with going into
Really? So like
equities.
Instead of double-digit gains in the S&P 500,
yeah, just take that safe, risk-free rate.
What is the biggest risk? I mean, is it just they're still concerned about a recession?
Still concerned about a recession. I just got off the phone with a hedge fund manager. He does long short. He actually has been trimming his technology stocks, and he cited valuations and again that risk of recession, but he was kind of an outlier. I still do feel people are defensive.
That square away with, say, portfolio managers who most likely would have like a bit of a longer time horizon there?
Mm-hmm. Well, stocks only go up in the long term.
That's
Jess.
what they always want to say,
that.
right?
That's what they always want to say. Yeah.
Right. So they're probably a bit different than, say, a shorter time horizon than hedge fund managers.
Especially on a tactical basis.
Right.
I think a lot of people are just looking at the gains that we've had in the NASDAQ 100 and thinking, all right, this has to crack at some point. We can't just go up forever. But on a longer term basis, a lot of those tech names, they have really strong balance sheets. They have strong cash flow. They have products that people want to buy. Maybe not the Apple VR headset. I don't know if I'm getting in line to buy.
Quick question for you guys then. What's your favorite currently stock to be long bias on? Talking more long term, not as a trading perspective. What do you think is going to be up the most in, say, a year from today?
Yeah, long duration stocks that when rates rise, they're going to have to take a hit. That hasn't happened. I guess it's the mega cap stocks that have really helped us. In terms of the job market, we saw a wave of layoffs that seem to have ebbed, right? I mean, I think it peaked around January or February, and we've gotten fewer and fewer headlines about big tech companies firing people.
Totally. I mean, I think they kind of, a lot of those plans also were like, outlined late last year into early this year. So like, granted, a lot of those were really just announcements when we saw the headlines.
So I'm seeing Adobe. I think Adobe's near those highs, but definitely has shown growth. Definitely could see that. And Lucid, I've not actually looked at the Lucid chart in a while. LCID, isn't it? Yeah. With Lucid though, I used to be quite pessimistic on them, but I'm liking them now. Since you've seen the new, is it Lucid Acid Air? Or Air Acid or something? One of their cars, absolutely ridiculously quick. And they're not the best looking cars, but considering a sedan can do that, I think there could be a big market for that. Yeah, it is electric, but that is what a lot of the buyers are going for now. So Lucid I could definitely see, and it's something, yeah, I don't know, that car, I said when I saw it, it blew me away. I think it raced a 911 Turbo S, and that for, you know, a 200k car, that is destroying everything basically. That Lucid Air just came in, and at least, I don't even know if it actually won in the end. I can't actually remember that bit, but either way, off the launch, there was nothing close to it. It just flew. And ever since I saw that, I got a lot more bullish on the Lucid thing, considering a relatively small company could do something as impressive as that. Because obviously you saw it, you see it with things like the Rimac. Yeah, they're electric cars, they're absolutely insane, but they're $3 million cars. People can't afford them. A Lucid Air, you know, 150k or 250, depending on what ones you buy. Expensive, but realistic. You know, same price as a G-Wagon. You see tons of people with them. Maybe not as many people would get the Lucid because it's not a tax write-off in a lot of cases, but definitely impressive to see. I do like the Lucid. And again, right now we're still actually below our first deviation. So still at a pretty good chance, or pretty good value. So yeah, definitely could see it squeeze into its second or third deviations in time. I like the look of Lucid. And then the Adobe. Actually, Adobe, the deviations have reset a lot off their earnings. It kind of jumped a bit, and it was sitting at its very extended, but now it's sitting all right actually. So Adobe, yeah, definitely could have some upside. I don't think it will be one of the highest profit stocks, but again, happy to be proven wrong. We'll see how it performs.
Of everything. All right. Fantastic panel. Thanks so much, both of you, for joining us.
And as well, guys, if you're enjoying the stream so far and you haven't dropped a like, would appreciate a like and subscribe if you haven't already.
Still looking at equity markets that are off a little bit, and I stress that. You know, the S&P 500 is only down by 4 points right now at 44.51. The Dow Jones Industrial Average down by 100, but at 34,318. Even it's had a good year, and the Nasdaq currently down about 5.5 points at 13,811. We're going to talk about the economy and its effects on the election next. This is Bloomberg.
Bloomberg Radio.
I think we're going to run into some ads. So again, if you guys want any stock analyzed or anything you're looking at, short, long term, let me know and we'll cover it. If not, again, the gappers today haven't been anything crazy. Our highest gapper that I can see is up 37%. Came into the 188. Again, we called these in the stream earlier. Kind of popped out of nowhere, quickly came below that level. So could have got a nice short on that if you traded it short. Subbed and like, I'll be plugged into your channel daily. Great, reasonable perspectives. Thank you, really appreciate that. Again, yeah, we're live. We try and be, well, we are live every day, 9:30 till 11 market time. Sometimes, you know, we'll stream for longer if people want it. And then again, yeah, whenever we have key things like this, we'll jump on, usually till market close, just to run through the key news. So whenever we got FOMC or J Powell speaking, a lot of times that's 2 p.m. market time, we'll be in for this. Looks like Bloomberg's come out of their ads, so we'll run back to that again. If you guys got any questions, I'll always answer them.
A lot of the data that's been coming in suggests that even if we do have a recession, it'll be very shallow and won't necessarily be enough to pull inflation down significantly more. So therefore, the Federal Reserve is not going to be cutting interest rates later this year. Now keep in mind that it's not that we've priced out cuts. We actually still have a cut priced for 6 months from now, right? So the market keeps pricing for a cut 6 months after the last hike, a cut 6 months after the last hike. The problem is that we've pulled forward now when that last hike is going to be.
Hear the full conversation on the latest edition of the Tape Podcast. Subscribe on Apple, Spotify.
Again, just while they're covering all that, just getting you guys prepared for tomorrow. Again, we have a lot of things. We have day 2 of the OPEC meetings. We have unemployment claims. This will be key. We won't be live for it, but watch it, especially if you're on the futures, and we will be live for the ISM Services PMI and the JOLTS job opening. We have a trade plan for this, so if you want to catch it, make sure that you're there for 10 a.m. market time tomorrow. And yeah, I guess that's going to be the key thing tomorrow. And again, we do also actually have crude oil inventories tomorrow. We also have a trade plan for that, if you want to be there for that. And yeah, we'll go through that, because normally we actually have it on Wednesday, but there were none today. So we have crude oil tomorrow, and we should actually have nat gas, but maybe that's been moved to Friday. Yeah, that's been moved to Friday. So just in case you do trade some of those storage releases, things that affect the futures specifically, again, a lot of these have been moved because market was closed on Tuesday, which are key things to be noting. And as well, this week, pretty big news as well, don't forget, we do have the non-farms, which is always a relatively big move. So we'll be looking at that. Again, market's definitely slowing down a lot. Does seem though, overall, the dollar's taking it bullish. The Qs have taken, the stock market has taken it as bullish. We're holding above, even though the initial sell-off was down. We are now holding above our pre-release target. So the dollar, the stocks, and let me quickly check the bonds. And the bonds have taken it negatively, it seems. Let me make sure, because they don't move all that much. We'll actually get a 2-year bond. I think that's 2 years, isn't it? Yeah, 2 years. Because these should be a tiny bit more liquid. Seems they have taken it basically flat, a tiny bit negative, but yeah, they're basically flat. Just trying to see if there's anything key again tomorrow as well. Yeah, tomorrow. Oh, we already talked about that. We have the ADP non-farms as well. Oh, I don't think I did cover that. I did the unemployment claims as well. Don't forget, tomorrow we do have the ADP non-farms. Again, this will tend to be a move. You'll probably be having to watch the futures for that, though. Because, again, obviously, stock market's going to be closed, so SPY may have some volume, but it's still pre-market trading at the end of the day. Again, if you were long last time, I'm going to mention it. The calls that we called out, again, they hit their VWAP. That's usually final target. If you're in it now, I would probably just cut out. You're still going to be up 20-30%, and just it is most likely going to continue down, so I wouldn't want to be staying in that. Oh, actually, it looks like it is smashing down now. But as long as we kind of holding the anchored VWAPs, we should actually be all right. But these will still turn negative even if we're holding the VWAP just down to the time decay. Again, these are 0 day to expiration, so these expire in 37 minutes or 36 minutes. So if they're not in the money by then, they expire completely worthless. So that's why they're going to be really volatile, and you're probably better off just getting out a lot of the times. Going to cut back to Bloomberg again. Questions, let me know, and I'll answer them all.
Today, she would like to see a broadening of this rally.
Yes, we're starting to see better improvement in the small cap companies, but there has been some justification for this very concentrated market. Now, for it to continue to be healthy, we have to see it broaden out, right? We can't forever be reliant on just a handful of companies. So I think in order to sustain this rally, you need to start to have small caps participate.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. More than 300,000 UPS workers are closer to striking after the company failed to reach an agreement with the International Brotherhood of Teamsters. UPS shares, they're down 2.1%. Rival FedEx up by 0.2%. Again, recapping, stocks lower. S&P down 0.1%. 2-year yield 4.94%, the 10-year 3.93%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks very much. Charlie Pellet there with the Bloomberg Business Flash. I'm Matt Miller here in the Interactive Broker Studio with Jess Menton. We're filling in for Carol and Tim today, and I want to talk about the big take story. President Biden obviously aiming for re-election in 2024, and it's key to him that he gets America's 100 million middle-class voters on board. He's got to convince them that the economy is better, not just make the economy better, right? It's all about perception.
Also, who have you guys got on the 2024 election? You going for Biden? You think Trump's going to win for the Republican side? If not, do you think DeSantis? Who do you think, firstly, who do you think is going to win, and who do you want to win?
The middle class, which I guess we just...
Or at least answer who you think will win, actually, if you don't want to answer, because we don't want to make it political. You don't have to answer who you want to win.
Middle class in America, and that's been the case for many years. But for the sake of this story, we looked at both income and wealth. And on the income side, we looked at income between $45,000 and $180,000 per person. And on the wealth side, it's somewhere between $100,000 in assets and $1 million in assets. We think that's a pretty fair set of boundaries for what most people would consider middle class in America today.
Absolutely. We don't have to debate it. I mean, for the purposes of the story, you laid it out really well, and you talked to a number of people who seem to me really worried about the economy, which is interesting because you can include a chart also that shows the increase in wealth since the pandemic. It's been absolutely tremendous. I think more than $6 trillion in total for the middle class, even including the $2 trillion in excess savings that have been spent off in the last year. So why do you think people are still so bearish?
Well, I think it's because they're looking at a number of different things. And we didn't just talk to 24 people. We also put a poll in the field, working with the Harris poll, in which we talked to several thousand people in the middle class for. And what we found is that if you ask them what emotions they see most in when they think of, or they think of most when they think about the economy, they list anxiety and stress. That's partly because they're looking at that hit to their net wealth. And it isn't just excess savings that we're talking about there. It's the impact on 401ks and retirement accounts. It's the impact on housing prices that we've seen. We see that in the Fed's distributed financial accounts data. It's also the way their household budgets have been kind of reordered by inflation. I think, inflation
Yeah, I'd be super cautious if you're holding the puts. They're coming down to basically be worth nothing. You go out literally 10 points. Those are already worth nothing. So be cautious if you're in puts, and really anyway, we're coming into the close. If you're in any of the 0 days, probably better to be getting out now anyway.
Anxiety about the impact of higher interest rates, right? If you are sending a kid off to college in the fall and you're taking out a parent's student loan, you are going to be paying an 8% interest rate. If you are buying a car, you're paying a higher interest rate than you were. The cost of servicing credit card debt, the cost of a mortgage were you to move from a house that you own now and into a new mortgage would be.
That's the point. Is anyone having that issue right now with remortgaging? Noticing the rates are super high?
Absolutely. They see the economy being resilient. They see they're hanging on to their jobs for now, by and large. But the fact is that people are feeling squeezed and they're anxious about what lies ahead.
So, Sean, how does this end up setting the stage for the election next year?
Well, if you think about what President Biden was doing last week in particular, they really ramped it up. The sales pitch is that the economy is going great and that Bidenomics in particular has benefited the American middle class. That may be true in the future. There clearly is a surge in investment in manufacturing that will lead to new jobs down the line. There clearly is a lot of investment happening at home that wasn't happening previously that will help the middle class in the future. But right now, the middle class is still having a hard time. And that makes the sales pitch from the president a little bit harder for folks in the middle class to absorb. It also means that it gives ammunition to his Republican opponents, whether it's Ron DeSantis or Donald Trump next year or someone else who will undoubtedly latch on to this.
Is it difficult to explain kind of quantitative advances and math to a demographic that would prefer to vote on feelings rather than pay attention to the data?
Well, I don't think they are just voting on feelings. I think they are looking at the data over the last year versus the data from before the pandemic. And there's no doubt that on the wealth side, for example, things turned when the Federal Reserve started raising interest rates in March of 2022. There's a very different reality today than there was then, which of course was better than it was before the pandemic. But people, have shorter memories than many economists.
Well, I just was thinking about the labor market. A couple of the people, you happened to find a few people that were laid off, right?
Well, just a note, play. So Dave and Buster's is having a double top and its second deviation. So if you were long bias, potentially an idea to be locking in profits. If we can come back to retest, looking to trade the short bias from 49, 49.50.
Still full.
Yeah, look, I mean, it's the data is the data, and the aggregate data often tells a very different story from what people are feeling at home. And I think that's the reality. I think, there is data there that points to a real squeeze on the American middle class. And yeah, we found a couple of people who had been laid off, but there's clearly been layoffs in the tech sector that we've covered heavily here at Bloomberg. There's clearly been layoffs in the mortgage industry. Someone like Lori Bloomstein, who was forced into retirement in Florida, who features in our story, who is a victim of essentially the end of an era of easy money. There are people in manufacturing who have started to lose their jobs in recent months. So it's yes, the aggregate picture is still incredibly strong and resilient. And that, in the end, may be what takes Joe Biden over the line in 2024. But at the same time, you can't just, and we heard this from Jared.
I'll be back in a minute, guys. Just going to go and grab a drink real quick. But either way, Bloomberg's going to carry on playing. And again, FOMC notes right at the bottom right if you want to see the key things released.
About the economy. And we're not here to tell them that everything is great in the economy. We understand that there's pain there. But we clearly have a sales job to do. And so, it's when we look at the economy, and I think this is true of markets as well as economists, we often look at the aggregate data. We often miss all the stories that are down there below that. And it's often those stories that are down there below that will impact on elections. Look at 2016. The economy looked to be doing incredibly well in 2016, and yet we know that a lot of people didn't feel that way about the economy and ended up electing Donald Trump.
All right, Sean, thanks so much for joining us. Sean Donnan, they are senior economics reporter for Bloomberg News, joining us on Zoom out of Washington, D.C. By the way, that Big Take story is also the subject of today's Big Take podcast, and you can find that on Bloomberg.com or wherever you get your podcasts. Don't miss the Big Take as well on Bloomberg Radio. That's weeknights at 11 p.m. Wall Street time. So we're going to talk a little bit more about this in a sense, Jess, when we talk a little bit later on in the program with Josh Green. He wrote a story about the student loan forgiveness that President Biden wanted to push through. The Supreme Court said, no way, Jose, but some are arguing he still needs to be on that. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom. Nancy?
Thanks, Matt. Treasury Secretary Janet Yellen is on her way to China for a 4-day trip aimed at finding some common economic ground. It comes days after China imposed new restrictions on 2 metals that are key to the tech industry. Secretary Yellen will arrive 5 years to the day of the first Trump-era tariffs on Chinese goods, duties that the Biden administration has kept in place. Greg Valliere, Chief U.S. Policy Strategist at AGF Investments.
I still think the biggest problem of all is chips. Computer chips is a big issue. The U.S. has not relented. We still haven't relented on the Donald Trump tariffs. So I think the chips issue may be the biggest of all.
Greg Valliere with AGF Investments. Ukraine and Russia are trading accusations over the threat of an attack on the Russian-occupied Zaporizhzhia nuclear power plant. Ukrainian President Volodymyr Zelensky is warning Russia may be planning to sabotage the plant in the country's south. He says they have intelligence that Russian troops have placed objects resembling explosives on the roof of several power units at the plant. Today, the Kremlin said it is Kyiv that's planning a provocation. Well, President Biden is not giving up on student debt relief, but as Bloomberg's Nathan Hager reports, his new plan is likely to face a new wave of legal challenges.
The president called his plan legally sound when he announced it hours after the Supreme Court rejected his initial attempt to forgive loans for millions of student borrowers. Even in a best-case scenario, though, the new plan couldn't be rolled out for at least another 4 months, and legal experts say it could face the same claims of executive overreach since it relies on authority from the Higher Education Act. In his ruling against the initial debt debt relief. Chief Justice John Roberts said that law could be used to reduce debt only under limited circumstances. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Did you know you can use AirPlay and Chromecast to listen on connected devices? Tap on the device icon from the Now Playing screen on the TuneIn app and listen to all your favorite stations like Today's Hits.
Okay, see if there's anything key. I'm just back. Yeah, it doesn't really seem much else is happening. We'll probably just end at the market close. No point really holding 3 past there. Don't think. Let me have a quick look. Don't think there's any after hour. There's no earnings today. I don't think there's any information coming out after market. You got. Oh, actually, 4 p.m. You have FOMC member Williams speaking. So I mean that's about the only thing happening after hours today. But he doesn't tend to move the market all that much is one thing today. We've also got Australian trade balance and the Japanese yen bond auction. But again, most likely no one's paying attention to those.
On the drive to work and the drive home.
Don't know what I do without them. They're awesome.
TuneIn brings together your music, news, sports, and more. Whether you're music obsessed, love to stay in the know with top news.
As well, if you haven't taken profits on those 450 calls, again, I'd be out by now. They're breaking back below break even. Getting actually a relatively strong pullback out of nowhere for some reason. No news on this. Yeah, might just be into the close sell-off.
I wanted to fulfill my contract.
True crime podcasts you just can't stop listening to.
Others escape justice to live and die in infamy. These
Plus the
individuals.
news and sports content you crave in podcast form.
Couldn't run in a straight line very quickly and didn't have much of an arm. His arm is stronger now.
So whether you want to save your go-to shows for later by subscribing and listening offline, or you want to discover a whole slate of new podcasts to be obsessed with, TuneIn is your destination. True crime, sports, lifestyle, culture, news, and so much more. TuneIn is Podcast Central. Hear them all here.
If you love sports, then you've got to upgrade to TuneIn Premium. It's your ticket to top play-by-play from the biggest leagues. We're talking NHL, English Premier League, MLB, and the biggest college sports.
High and deep right center field, and that baby is gone.
Plus, commercial-free.
No clue why this ad is so long. It cuts up quick. But again, nothing really to comment on the markets, otherwise I can't be talking now, but yeah, nothing really to see. Again, we got the ISM tomorrow. Make sure you're here at 10 a.m. because we will be going through the trade plan for that. But I think that's about it.
Europe Edition, available now on your podcast feed each weekday morning by 7 a.m. in London. Get the news you need to start your day in just 15 minutes. Subscribe to Bloomberg Daybreak Europe Edition today on Apple, Spotify, and everywhere you get your podcasts.
At PPAC Private, we know that dreams can lead to great achievements. And that path, from dream to reality, takes planning, hard work, and determination. Our wealth managers understand our commitment to client success. We're dedicated to providing the guidance that helps them achieve it, generation after generation. While others dream, PPAC clients achieve. For advice in planning, investment management, and trust and fiduciary solutions, visit ppacprivate.com. Not FDIC insured, no bank guarantee, may lose value.
It's time for today's STEM tip. Okay, you know recycling is important. No one wants.
Yeah, we are seeing OSTK massive sell-off out of nowhere, really. Yeah, down 2% in about the last hour. Seeing a lot of things. The market pull back a bit. You're seeing a few things pull back quite heavy. Same with MGM, so MGM Resorts International. Relatively strong pullback out of nowhere. Play pulling back slightly. AMC, whatever. CZR, again, same thing. So Caesar Entertainment. Tends to be more the casino-related ones.
Balance of power in F1 might be shifting. Bloomberg Business of Sports. Subscribe today on Apple, Spotify, and everywhere you get your podcasts. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ trading lower. However, the NASDAQ 100 index is in the green. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red, but well off.
NASDAQ slightly green, SPY still red.
S&Ps are down by 5, and NASDAQ declines by 6. The U.S. 10-year yield at 3.94%. Gold is down 9. Oil is climbing. And Bitcoin is down by 1%. Among the main 11 S&P sectors, leaders were utilities and telecom. Energy and materials were under pressure. And leaders to the upside in the Dow, Salesforce and Boeing, while Intel, Nike, and Dow Inc. each fell 2% and led to the downside. Regarding the Fed minutes, the Fed said almost all officials expected more rate increases in 2023. And in other news, Transport Knight-Swift reported they see Q2 results lower than previously expected. Wrapping things up, Facebook gained as much as 3.5% as the company is expected to launch their Twitter competitor this week. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over at your Bloomberg, type SQUAWK, SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, so Q's is still, NASDAQ still green. Potentially could turn red by the end of the day. SPY still red, down about 1/10%. The NASDAQ up about 1/10%. Again, we've got about 16 minutes till the close.
NASDAQ 100, and now a lot of portfolio managers in particular are trying to figure out how do we position in the second half of the year if they were maybe too defensively positioned. And so I want to...
It is, by the way, the best first half ever for the NASDAQ 100.
It is, yeah. It was.
Yeah.
And then the S&P 500 not doing too shabby either with double-digit gains so far this year. But I want to get straight to our next guest, David Dietz, who's Managing Principal and Senior Investment Strategist at PPAC Private Wealth Management, who's joining us on the phone in Summit, New Jersey. David, I want to just kind of take a step back and kind of get your take on the rally this year and how you're thinking about positioning for your clients in the second half of the year.
Well, in a way, it's been an eye-popping rally here, as you pointed out. Best first half for the regular Nasdaq since 1983, 16% of the S&P 500. That made almost every strategist kind of look a little foolish because everyone was very cautious about this year. In fact, most predicted a recession, and the recession is nowhere to be seen. So, where does that leave us? Well, the fact of the matter is valuations are now stretched here. And we're still grappling with inflation. We're still grappling with a Fed which does not know when it's going to stop. And, of course, recession fears are still lurking out there. In fact, they may even be heightened based on news we just got in the last couple of days from the second largest economy, China. So, it's not easy out there.
Yeah, well, we could be in a recession right now, for all we know, but it would be a very job-full recession, right? What do you think about this labor market, David?
Well, we're going to learn a lot more on Friday. Certainly, the job creation has started to slow, but still, with a 3 handle on that unemployment rate, it's hard to say that we got any kind of a problem with jobs. Having said that, of course, a lot of the new job creation is in the service sector, and quite frankly, the lower paying jobs as people get out of their house still in this post-pandemic world and want to go to the bars and travel and so forth. And there is pressure going on in financial services, for example, where the job creation is slower. Those are some of the better paying jobs. Obviously, all eyes by the Fed are on that job numbers. It can be very hard for them to continue this rate hiking if we see material weakness in jobs, and something investors have to watch for.
With these different cross currents going on, how are you specifically telling your clients to position in their portfolios?
Well, I do think that bonds still make sense here. Well, they make a lot more sense than they did a year ago. And what's real interesting here, Jess, is that the real yields continue to widen. What are the real yields? Those are the yields that we see printed in the Wall Street Journal every day, less what inflation is. And to the extent inflation is coming down a little bit, and we're starting to see, the 10-year is knocking on 4% almost, that means real yields are increasing. Well, that's great for bond investors because historically those real yields will tend to contract as we go forward here. But it may be difficult for companies, right? Because a lot of companies are very indebted. They're going to have to roll over that debt. It's going to be difficult. So what I'm telling investors now is get back to your long-term disciplined asset allocation. Take some profits from a great first half and add those into better yielding fixed income.
Let's talk about stocks you like, David. You always include a few picks for us. And Bank America is one that just passed the stress test, and I guess they're going to be able to pay out more to investors. What's your take on BAC?
I think you got an opportunity here. This stock is down about 25% since February, while the S&P 500 has done nothing but go north.
Talking of the BAC, so Bank of America, don't forget next Friday, so the 14th, we have lots of big names. Well, UNH, not a bank though. JP Morgan, Wells Fargo, State Street, and Citi all have their earnings on that Friday, so should be key. They're all pre-market as well.
I think the problem is that as interest rates have moved up, the value of their bonds in the portfolio, the mark-to-market value has moved down, but they intend to hold most of them to maturity. So I think people are being overly cautious. And remember, this is a bank where you're not going to be moving your deposits because you're afraid of the stability. That's the smaller and regional bank problem, not a Bank of America problem. So I would take advantage of it. This bank selling for less than liquidation value and hop in. I do think that if interest rates start to come down, and eventually they will, I think people are going to come back to the banks because there's less pressure on what they have to pay for deposits, less pressure on their portfolios. Bank of America is a winner.
One of the worst performing sectors over the last 12 to 18 months has actually been in the REIT space. What particular stocks are standing out to you that you think potentially could be a look here for some investors?
So we really like this Realty Income as an example. As you point out, the whole sector is down. So we're looking for some, so-called babies that perhaps have been tossed out with the bathwater. Why Realty Income? We confess to having a soft heart for dividends. Realty Income is one of those dividend aristocrats that has increased their dividend for more than 25 years in a row. Now, right now, it's yielding over 5%. I look at that compared with, let's say, the 10-year Treasury, which is under 4%. I could have my clients invest in a 10-year Treasury, get under 4% for the next 10 years, or have something that starts well over 5%, increasing historically year by year by year. Now, of course, what's the risk? Well, they're focused on the retail sector, but they got
Tesla on the highs as well.
Primarily in the United States, and they're in the service sector of real estate, which is less prone to being trumped by, for example, e-commerce and things like that. The credit rating of their tenants is very high, and also they're focusing on the so-called triple net lease, which means the tenant, not the realty income, has to cover changes in operating costs and taxes and whatnot. So we think that's a great conservative way. The stock is down about 25% from, let's say, last fall to take advantage of these nice dividends.
Just got about 30 seconds here. ExxonMobil is one of your picks as well, and they're in the news today for various reasons. They got the go-ahead in Guyana to sink some wells offshore. On the other hand, they're not paying their oil traders enough. Why do you like the stock?
First of all, it's one of these global integrated, so you're not just rolling the dice on upstream production and so forth. Yeah, Guyana, we think is going to come on to production far sooner than the street had forecast. Plus, of course, we love the Permian low cost, and the Dallas Fed's pointed out that the cost inflation in extracting oil there is going down. And also, there's this wild card where they're going to be able to use carbon dioxide, suck it out of the atmosphere, inject it into these wells, and that could be a lucrative area too.
All right, David Dietz, Managing Principal and Senior Investment Strategist at PPAC Private Wealth Management. This is Bloomberg.
It's time for the music that's trending on.
Okay, we've got about 9 minutes to the close. Again, the SPY's coming back down to test. Basically, you've now got three kind of levels here. Got the VWAP, you've got the anchored VWAP, which are normally the two I pay attention to, and then you've got this orange line, which is the FOMC at the price level just as the FOMC released. So that's quite key. Qs is actually now turning stronger, which is quite weird because I think it was underperforming the SPY before. SoFi again came in to test the anchored, selling off. Tesla at its highs, currently pulling back though, but we'll see if we can hold. The currency, so the dollar, tends to be fading a tiny bit after hours. We'll start seeing how that performs. And JPM, again, quite a volatile day for JPM, but still kind of holding near these lows. So we'll start seeing how that can perform. Again, like we talked about a few minutes ago, the key thing on this JPM is going to be they do have their earnings week Friday. So that's what I'd be watching out for. We also, let's have a quick look at Bitcoin. We've just had BlackRock's CEO, so Larry Fink, say Bitcoin is an international asset. Oh, it's actually taking that as negative news. It's quite weird. Let it play out a bit more. Might be I can't see why that would be taken as bearish, unless they're not a big fan of the institutional adaptation of Bitcoin. But again, I'm not a massive fan of crypto. I don't look into crypto all that much, so I don't know massively how it moves. But it seems like it should be bullish. Yeah, even on TradingView, this is actual Bitcoin, so it should be a bit clearer, but starting to get a bit of a bounce. I do think this will probably be a fade move because, again, it seems like a relatively good move. So wouldn't be surprised to see it kind of push back to kind of $30,000 and 500.
For TD Cowen, and on Bloomberg Surveillance this morning, she told us there are a lot of things in the airline industry that are happening simultaneously.
The Secretary of Transportation asked the four big airlines serving the New York area, Delta, American, United, and JetBlue, to cut their summer capacity by 10% because air traffic control is understaffed. And then you add to that winter or summer rather thunderstorms, and you have all the aircraft have to land, especially the ones coming in from overseas, and then nothing's taking off. So you get those issues with aircraft that can't find gates.
And you can hear more of the conversation on the Bloomberg Surveillance podcast, so you can download it wherever you get your podcasts. Among airline stocks, UAL, parent of United, up by 1%. American up 1.2%, Delta up 1.4%, Southwest Airlines up 0.8%, JetBlue rallying today by just about 4%.
Did see as well, it kind of struggled near those highs, starting to pull back to VWAP. Be looking at that tomorrow though, $49. If we can push there, definitely looking short bias Ultra as well. Alerts just got off, so we'll throw that on the chart. You can see where the key levels are.
PS down now by 2%. FedEx up by 2%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, Jess Minton and Matt Miller in the Interactive Brokers studio in New York, and taking a look at one of these stories specifically about New York City crossing the terminal. Matt is looking at how, not surprisingly, New York City's unhealthy air is tied to fireworks and scorching weather. And so I don't know about you, but I feel like over the past month, especially, there was one day I left the office.
Never mind, the levels have moved since the alert's gone off, so that's why it's actually not near level. But if we do continue down, 470 support. If we push to the upside, we got $500 as a key resistance. Onion news, DWAC is going to be all over Reddit tonight. Expect $20+ tomorrow. Again, it's just a hype move. It can push again. Obviously, it did the pre-market. Hit our deviational resistance, even hit the pre-market one dead on at $15.70, sold off. We're now retesting. Considering this is a retest, I will be looking for the break, but I am flipping short buys from 1850 or above, looking to take that short buy to either vertical spreads or outright puts. And if we did push higher, $21.70 to $22 as that next key entry. So again, if you're kind of a diamond hands trader, cool, play the upside, but considering how this has moved non-stop in the past, I'm playing it bearish. That's most likely going to be how it acts out. As we can see from all the previous squeeze, this will most likely be another one, and you'll see the candle all the way back down here soon enough. At least that's what I'm expecting, and that's how I'm going to play it.
But I guess we just need to get used to this kind of air quality.
And 2.5 minutes to the close.
I mean, I can speak being from Texas. There's definitely places you can drive off the side of the highway and you can go buy tons of fireworks. A lot of it's illegal,
all year
though.
round?
Yes. And not that I'm condoning or trying to tell people to go do that, but there are places that we would go and buy some around 4th
That's
of
awesome.
July. So that was something that I would always partake in when I was down there. It was lots of fun.
Yeah, fireworks are a lot of fun. I typically see them only, here in the U.S., only on the 4th of July. I lived in Berlin for the last 6 years.
That's right.
You have not seen anything until you've seen Berlin on New Year's Eve. It is like a war zone. Hopefully,
if you're wondering what's up with DWAC, it's over this. Trump media merger partner reveals $18 million preliminary settlement with the SEC. So, obviously, if the Social Truth, I think it's under, is looking to merge, obviously, if their partner is getting away with that 18 million, or they're settling with the SEC, it's always a confirmation that's always going to be good. You saw it recently on 3M. They were paying out, I think it was $3 billion. The stock moved up on it because then you know exactly what you're paying, you have the answers, so there's less uncertainty, which makes it stronger. So that's why you're seeing a move on it today. But again, even if we get the pop, take it, trade it how you will. To me, I'm still looking at it short bias, because even if this merger goes through, I still am not long bias on the stock. I think it's still going to be overvalued and it's a hype play. But again, that's me. We as well got 40 seconds to the close.
It's a waiting game right now until the jobs number on Friday.
It really is. And just looking where the S&P 500 is about to close, basically.
And yes, I agree with that. I do think it will be pretty flat market until we get those numbers. Tomorrow we got the ISM, be a good day trading opportunity, but probably won't be a swing trading opportunity. The non-farms can definitely give us a swing.
Wall Street strategies being right below 4,100.
Yeah, I think we could have taken today off and tomorrow as well. I have a really cool interview that I don't want to miss tomorrow, so I will come in regardless. But yeah, we're definitely sitting on our hands.
And there we go. Markets are closed. So I mean, we'll probably wrap this up. There's no point carrying on into the close. What was, and actually is key to know, what happened with SPY, what happened with the Qs? They sold off coming into the close. They've now closed below their FOMC price. So this could be taken as bearish. I wouldn't be now surprised to see maybe a bit of a gap tomorrow. And then what you tend to see is you get a gap, unclear what direction, ideally to the upside. and then you tend to see us come back and retest this level. We'll probably come back and fill that gap tomorrow if we get one again. That's what I'm expecting. It tends to happen quite commonly, but again, no guarantee, but we'll see if that plays out. That's probably what I'll be looking for potential trading opportunity tomorrow, though. If we do gap out, or looking to play that gap fill is what I'll be looking at. Again, that DWAC also kind of pulled back coming into the close. Basically closing on our key level that we stated. That's not really a surprise. So we'll probably have a gap pre-market. Again, if you're not a pre-market trader, watch for how this moves. I do think this is going to be an overreaction, but sometimes these reactions can last a while. So if we do, we've already tested this 1570 pre-market today. Wait for the break, and I'm short bias from 1850 and above. And then just to confirm, the Qs closed flat on the day. The S&P closed down 0.15%. And just to confirm, we'll go on to the futures. The futures actually have turned negative. We can't see completely how they close because they close, I think, in 15 minutes. So we're going to end up the stream here unless you guys have anything to run through real quick. So let me know quickly and I'll run through it. Otherwise, we'll call it a day. And we'll be back tomorrow morning, 9:25, usually 5 minutes before market open. We'll jump on. AI closed up as well, 7% today. A relatively big, big hype move recently. Moving on the name, I think just because they have AI on the name. If we continue up, we're really looking to break those highs and getting short around $50, $52. And to the downside, Unity, one of our biggest losers on the day, came into our first deviation. You bounced off this a couple times. Finally got the break, the retest, and then the fail through. So should be quite bearish continuing this. Don't forget, it was overbought when you're at second deviation or above. You're quite overbought, so wouldn't be surprised to start seeing this pull back. Have a target right now of $38 if we continue to the downside. That is everything. Can't see anyone asking for any new stocks. So hope you enjoyed. Hope to see you next one. And that's it. Peace.